What's the dollar's next stop? What about stocks? Hi, everyone. I'm Maggie Lake, and today I'm talking markets with Dale Pinkert, trading coach at TradeGateHub. Dale, so many questions we have. It's so good to have you on.
Yeah, it's a lot of forecasts be manifested. I would say the main theme now, it's very tricky to try and call a bottom, even though it went to target. And there are some lessons about it's not just price, but how a market gets to a price that is really critical. The market hasn't shown any divergences here yet, even though we got to that 4,900 level. So I think that people may want to readjust their thinking from being
Mm.
a position trend trader to being more of a guerrilla warrior and being tactical. Learn how to scalp, lower your time frames, and just look for maybe 2, 3 day opportunities now rather
Mm.
than trying to be there for the big moves that I think is going to take some time until we get to those inflection points to where you could start to build positions. In fact, I too was surprised by the acceleration, the velocity of the break.
Mm.
I thought that we would get to this 4,900 level. I'll just
Well, but while you work
bring
on
the
putting up
chart up.
yeah, while you work on that, let me just update for anybody who may be away from a screen right now and listening to this. We saw a lot of volatility again today. Walked in with a huge rally in US stocks this morning, only to see it completely give way to selling again. 1,400-point gain for the Dow wiped out all the major averages down. Now, once again, NASDAQ, I would say the worst hit, but it's not. The Russell is actually down almost 4% again. NASDAQ down 2%. Even more worrying, we have the VIX back above 52 in the high 50s. It's settling a little bit off that into the close. The Trump administration announcing or saying that 104% tariffs against China will go into effect at midnight. So, just a lot coming at traders again. So let's start with that S&P. Dow, if you get that chart, if you have that chart up. And you're right, you warned us. You sort of set these levels and kind of gave everybody idea of what we were watching, and once again nailed it. So talk to us a little bit about what you're seeing now.
Okay, so this is a megaphone formation I introduced on your show. I think it was in the fall last year. And I said it's a very difficult formation because people get bullish at new highs, bearish at new lows. It's an expanding formation. And I had all this confluence here with the megaphone line, an uptrend line that's being broken, and the 200 week coming in here. So, did I buy the market at that price? And it was a place where I'd say, cover all your shorts, but it's not necessarily a buy. And this is why I pay attention to momentum and the intensity of the decline. Uh, I didn't think we'd get to 4,800 until, I don't know, late spring, early summer, May, June, July timeframe. Getting here in early April and having these kinds of readings at major support doesn't really give me comfort or anything technical to say, yeah, besides it holding the line and bouncing off the line, I don't have any divergences here. All right. So I would expect new lows. Um, One scenario that could turn me bullish would be breakdown under 4,800, right? And then close back above it. And then I'll know that we had some type of capitulation. They took everyone out. This has been, let's call it that a lot of people were right. There wasn't euphoria at the high that all the Super Bowls were talking about that we were going to have at 6,400 or 7,500. And anyone who's been trying to buy this market because there are too many bears or there's record put buying, sometimes a fundamental situation can overwhelm technicals, and that the market changed. Okay. It doesn't mean that you have to change, but it means that you have to at least recognize that there's a change. I mean, you look at the ranges you had looking left, and then the expansion of it, especially this day right here, was very tricky. In fact, I'll admit I covered shorts going into the tariff announcement by the president,
Mm.
and then you wake up the next day and you're down here. So you had to chase to get back on board. It wasn't easy to do, but even things like gold finally caved during this decline. Gold finally topped at 31.50. So what we have going on is a deleveraging, Maggie. And the administration is trying to justify this by coming out and saying, "Hey, most Americans don't own stocks." But I remember being on air with you after reading that U.S. households have never been longer stocks than they were at the end of last year. So it's not that people don't own stocks. Okay, sure, there's some people that don't, but there's a majority of people that the billionaires aren't at Robinhood. Okay, there's a lot of
Mhm.
people in the stock market. So right now, I don't have the same conviction to say I want to buy this market. I don't have a lot of conviction saying that it's right to get short here either. We're kind of in a position where it's kind of late to sell
Mhm.
and early to buy. So you just have to let them be a spectator for a while. I think most of the crash part of this decline, even if we go another 10% lower, some people talking 4,500, will be more of a grinding decline, not so much of a crashing decline. But if I really want to be bearish, Maggie, if we close under this 4,800 and we can't recapture it. Similarly, like to 5,500, we really would need to get back above 5,500 to, put an end to this decline. But if I look at this as being one big false breakout here at, above this 5,500 level, this whole thing was a false breakout, a
Mhm.
measured move from here. Okay, this was 1,300 handles. So if we break this and all of this, look at all the gains that were wiped out. You could go
Mhm.
all the way back to um, almost the end of 22.
Mhm.
So I mean, there you're talking about years of gains. Look how long it took, and this is why they say down is faster. So Niagara Falls in a barrel. If we break 4,800 and we stay under 4,800, that would target us down to 3,500, which was the low in October of 22.
Ugh.
And I can't rule it out.
Well, that is, I think something for everyone to really take stock of, and you made a really important point, Dale, which is that, maybe be a spectator. If you're too late to sell and too early to buy, I think people are, like, looking at this thinking they should be doing something or losing their nerve if they didn't get out and they feel like, they can't tolerate the losses, but it is a really, really tricky and really painful spot to be.
Well,
So,
most of the bears were saying 10% correction in S&P, so I was saying 20.
mm,
And that's what it turned out to be. And what's important about this is the first 10% correction that we had in a while. And it's the first dip that people probably bought that didn't work. Okay. But I guarantee you the dip buyers are not done. So, it feels late for me here's why it feels late. Last year, you guys know I was bearish Apple. I was talking about China and what would happen with
you were
tariffs and
banging the table on that.
for Apple for I don't know, a year and a half, 2 years, something like that. And but not 175 was one of my targets. Okay, I think we could go 150, but this was one of my targets. So what am I going to do? Start getting bearish Apple now?
Yeah.
No, but can I get bullish Apple now? No. So that's kind of what we have in a lot of this stuff. I was bearish in Nvidia for a couple years from this high, and then started again. Nvidia actually has held up pretty well, but now see what it held this 80, this low it took out. Still looks like we could see 60 in Nvidia. So there aren't many markets out here that are saying it's time to buy. If you start going to 4-hour time frames, you could start looking for divergences and try and trade bear market rallies like you're getting in Microsoft here, right? We diverge. So, you'll have technical reasons to trade, but trade off shorter term charts for a while. This was an auto wreck. The market's still in shock. There are aftershocks. It's having seizures, and you don't have to play. You can find other things to play. You could trade. Currencies are not as wild, and they're still trending. I'm still looking for under par, and we had a little rally here, but this market still looks pretty negative to me. Euro, gosh, we were talking 102 euro, 105 euro. Uh, who would have thought that the euro would have become a safe haven in a financial crisis? Especially, I mean, things aren't great in Europe, but the euro is the strongest currency against the dollar right now, stronger than cable. Commodity currencies got killed. Look at that Aussie, the Canadian. But the euro has become an island of stability as China and Europe grow closer together. I saw this coming, and the vacuum will be filled by China. So
Wow, that's a big just that Europe will need, if they're facing tariffs in the US, Europe will need a trading partner somewhere, especially German manufacturers to send their goods, and you're thinking that China will be the market they try to look for?
yeah, I think China, the Silk Road, I think this is the opening China's been hoping for. So when you become an unreliable trading partner, it's something, it's even like that in life, right, Maggie, that it takes years to build trust, and it takes one act to destroy it, and many, many years to attempt to rebuild it if you can at all.
Mm.
And part of what's going on here is uh, the unpredictability and United States changing its role as being part of this order to withdrawing from the order, and everyone's on their. It's up for grabs. Everyone's on their own.
So when we look at the dollar, you said maybe there's some opportunities in currencies because things haven't been quite as extreme there. Um, is that sort of the next shoe to drop? Because there are a lot of conversations or a lot of speculation that the administration wants to devalue the dollar. They need a lower dollar. And one way or the other, they're going to try to figure out a way to get it. Now, we have seen it move lower in some instances, but do you feel like there are bigger moves to come in currencies?
Yeah, a long time ago I was talking about that. I thought the euro could trade 118, 120. So I think we're about from here, I don't know, about 60% through the move. So I still think there's more upside, and I'd buy weakness if there was a pullback to 107, 106. I'd buy it. But we start getting through 112. It's easy to make a case for 120. The yen is this is a big change of trend too. The yen looks pretty ominous to me. If we take out 140, you could call this a big head and shoulders or descending triangle. And this 140 and 160 is going to measure down to 120. Now, normally you would expect rates to fall with this, but the yen's falling today, and anyone that could figure out rates, please have them call me, because there's really been, you get negative. The 10-year has really been
Yeah, let's talk about rates, because
okay.
MK is asking, what are your current thoughts on TLT and long-term rates?
Well, TLT, I saw the top coming here for correction to 88, and as I was talking to you, Maggie, before the show,
Mm.
this is not the bond market that I grew up with in Chicago. Because if you would have had a 40% decline in NASDAQ stocks, like say we did with the dot-com bust, you would have seen bonds limit up, yet alone the first up day where you didn't need flight to quality. It's given it all back. This is an ugly chart. And the worst of all worlds is an economy that is under pressure, that can't get interest rate relief. And part of the reason is, if the euro's going to 120, why do I want to own US bonds with a depreciating currency for, lower rates? Or wouldn't I rather own bonds in Europe with an appreciating currency? At least I know the currency is not being it's not being, taken apart by what the administration wants to do, a weak currency. So I think that's, part of the problem. And I ask everyone I talk to, that is a weak dollar being risk on dead? And I proclaim that part of this was capital flight from the U.S., and capital flight from the U.S. is going to continue until the dollar reaches a level and people want to own it again.
Mm.
And I don't know when that's going to be. Most people would have thought with a crash like this that we'd be looking at subpar euro, not 109, 110.
These are some really big changes that we have to pay attention to. I'm going to ask, we have great, hi everybody. We have great comments and questions coming through. I want to try to get to as many as I can. Regreen one asking, what about the Swiss franc?
Okay, the Swiss is like the dollar. So it's a flight to the safety currency. I really don't trade it. I don't have a comment on the Swiss, but it's been one of the strongest currencies against the dollar, um, just like the yen has been. The yen has gone from being one of the weakest currencies against the dollar to being one of the strongest. So the yen and the Swiss are two of them. I'm trading. I like trading the yen. So you know, the SNB kind of lost a lot of traders when they depegged a few years ago. So I don't like dealing with the SNB and having them. They pull things covertly out of the closet. Not that all central bankers don't, but just a trade preference. But you know what? A chart is a chart is a chart, and it's the Swiss have had that history of being a flight to safety currency for a while. So that's my no comment on it.
Swiss National Bank is the central bank for Switzerland. This is Douglas. I'm going to put your comment up. It's not really a question, but I think it's really something we're hearing a lot of people are trying to grapple with. Not one thing macro wise should suggest gold go lower. It's going to be limit up soon. This is I think people have been trying to grapple with this, because you looked at gold and okay, maybe people are liquidating, it's collateral, they're selling, they're raising money to meet margin calls, however you want to frame it, but so that's caused some downward pressure. But longer term, bigger picture, there just seems to be so many arguments for gold. How are you thinking about that?
The same way, but don't wait for limit up and the short squeeze in the silver, the short uh, squeeze people for silver. They're going to have to wait a little while too. But I think there's going to be some great buying opportunities. So why don't I just share it again and we'll get the charts up there.
Okay.
Okay, so
Uh,
I got it. So
yeah. Okay.
in
And while
fact,
you, this
gold
is,
is part of the deleveraging play. I mean, if people are going to liquidate their most precious um, currency, which is gold, they have to be under some pressure. But this is the way I see it: is that gold peaked up here.
can
I
you
had
put
a
your, we're
four.
not seeing your chart. Put your chart up
Oh,
on.
okay.
Yeah.
Huh.
Oh, is it not? There you go. Took a minute.
Okay. All right. So there were divergences up here at 3150, and gold really got started to top during the decline, but really got cracked on the crash day. So that was part of it. It was a wave 5, which means that we completed something, and maybe we're going to pull back for a wave 4, but I think that you're going to be able to buy this gold maybe around 2600 or so over the coming weeks or months, and just be patient. In fact, your preferred long eventually is going to be this move. Really did surprise me was the gold silver ratio really just exploded during that um, during the crash and during the panic. And I don't think silver has as far to fall, but I can make a case for down here and 26 or and a half going into the summer. I don't think it should close back under 26 or 25 and a half, but I know guys that are calling this all of wave 1, and this is 2, ABC, and then the big wave is going to come, and this will be the time that silver outperforms. And I think it's all going to basically come down to when's the Fed going to start to use their bazookas? So far, they haven't.
Mm.
Maybe it's going to take 3,500 in the S&Ps. Maybe it's going to take unemployment getting worse. Maybe it's going to take something that really worries me that I brought up with Harry last time that we already had the first break was the financials. Okay, they all really look bad. Okay, Bank of America hadn't made a new high for years. Here's the group. XLF doesn't look as bad, but Jamie Dimon's bank and all of them are look like they're in serious trouble. And I featured B of A because they have the biggest duration book. To me, that's the problem that on this break, we saw um, credit spreads explode because money managers and pension managers, I guess, never learned the lesson when they were getting their MBAs that the higher the yield, the higher the risk. So they were all piling into junk, which is paid great, and all the other corrections throughout all the years. We never had spreads blow out like we had here. So that tells me people are worried about junk bonds and the repayment of junk bonds,
Mm.
and I could see them falling to 70, and that would still just be a correction. But that means there's plenty of turmoil left in the market, and the spreads are going to continue to blow out, and that has could spill into a financial crisis. So there's a lot of things I sure wouldn't want to have to be Powell right now. So what does he do? Continue the fight against inflation, or open the spigots? And because there's a delay in the transmission of Fed policy getting through to the real economy. I know people that have said he's been behind the curve to ease for a year now. So we need the Fed put to. I don't see really any other measure or highly unlikely for the president to roll back on tariffs. But I
Yeah.
think the Fed is the only thing that's, can soften the blow or save the markets. And they're going to be busy.
Yeah, and very publicly taking on the chin, regardless of what they do as well. They're in the crosshairs. Certainly, Powell is of Trump. Green asked a great question. Why would gold drop so much? So, if we've got this backdrop, I think a lot of people are saying, well, it's kind of the only safe haven out there, really.
Mhm.
Why would we see downward pressure to perhaps 2,600? What would be the cause of that?
Well, how about all that gold that got transferred from the UK to New York and there not being the demand? And that was to front run tariffs. And someone has a lot of gold on their hand from the highs.
Mm,
Okay. And demand right now may not be as great from central banks, including China, since they have to contend with other issues. Maybe they won't have the same liquidity. And just the law of nature. Really, gold has had a tremendous run. So for it to pull back to 2,600 after bottoming for this wave at 18 and running to 32, that's 1,400. So for it to give back 38% is just a normal thing that could happen in a bull market. We haven't had a good correction in quite some time. We've had time corrections, but look, who's bearish gold? I think I was the only one calling for a top last week with
mm.
the market crashing because when you have a liquidity problem, like you were saying earlier, people will sell the kitchen sink to raise cash. And this is also just part, it's an asset, it has no yield. You've had great appreciation, and sometimes people have to sell their winners,
Yep,
and that's what they do.
that's always the concern. Uh,
Yeah,
you looking at Bitcoin at all, Dale? Because we
I am.
saw, yeah, I
Yeah,
saw.
it's been respectable. I've been talking 72 for a while. We're almost there.
Mm,
So it's this formation right here. So we had two drives, and we have another one coming up right around 72. So watch Bitcoin. I think it was respectable how it held to get. I mean, it's eroded, but we're reaching objectives from this formation. We're headed towards a wedge line. This may not be a bad place, but you still need to manage a risk. So if you buy Bitcoin at 72 and you're not a hodler, um, wait for a reversal day off 72. You don't have to buy the bottom. Wait for some good technical action to confirm that this means something. You
mm.
don't just buy it because it's there. See if the market reacts to it and the sell off is rejected from here. And then say it bounces off here and goes to 74, then you could drop your stop, say a grand under 72, and your position. Because if it gets us through 72, maybe it's going to 52. So every trade is a probe with initial risk. Every trade you take partials when the market's moving your way, and every trade you protect the remainder of what you leave on, and you leave it on, or when the windfalls come, you'll have nothing on. I know because I've done that many times. So I hold half. So 72 looks like might be a decent spot to try it.
I think that, in across so much of what you're talking about, I know we're really locked into these levels, a lot of people, and I can see in the chat that, um, you know, people have their eye on some targets as well. But I just want to make sure that we highlight the fact that in all of this, you've been talking about not being active if you don't need to. Don't feel like you have to do something. Don't try to time the absolute bottom, right? Wait for a sign first, if you have the luxury of doing that. And approach it with discipline, right? Don't just go all in on this.
Don't go all in on anything ever.
Yeah, you just said this, right? Like you probe a little,
You
you
probe it.
yeah,
So you're being
run through that again.
opportunistic. You're being
That sounds like your framework. Run through again how you do that.
All right, so you're being opportunistic. You have technical targets coming in with this wedge line coming in at the same level. I don't know, maybe there's some moving averages that might support it on the weekly. Let me look for, trading is almost like being an attorney that brings in a case to court. And the more evidence you have, the more powerful the case and compelling the trade is. So yeah, we're playing right here with this 50-week average.
I think share that again if we're going to look at it. I think it's not up.
It didn't switch over?
No.
Okay.
It might pop up in a minute.
There is a little lag.
I think that, there's so much. Yeah, there we go. There's so much action on everybody's computer that we feel like the worldwide internet is slow today.
The only thing running fast is the markets.
Exactly.
Everyone else has hamsters running their internet. Hurry up, guys. Come on. Come on. Spin that wheel. So, I mean, that might be a shot. The most contrarian thing I'm doing, and I started talking about this before the ultimatums from President Trump, but it's the ugliest chart on the board. Okay, I don't have many divergences, but I'm using calls to buy crude. I'm going out to July using USO, and that's an ugly week. We have a breakdown. So you don't have to be like me and scale into calls. This would be a similar thing. Like, remember I was talking about 4,800. This would be analogous to 4,800 in the S&P. And that if it breaks down and gets back above 4,800, it's a buy. So you could wait for it to close back over, say, 61, 62, which is this line. I've shown this line on your show before. I waited a year and a half for this line to be tagged, only to be stopped out within 10 hours of trying it. Okay. I waited a year and a half to be stopped out in about 4 hours. So now I'm approaching it with calls because I do believe that Bibi wasn't here to talk about tariffs. He talked about tariffs, but and I know they're having some type of they've opened up a dialogue that they're going to be talking to the Iranians on Saturday. But I still think with all that military power in the Middle East, plus what a coincidence, Saudi decides to raise their output, which could cushion any kind of supply problems that would happen on an attack. So I'm buying calls in the crude, thinking that it could be a false breakout and we could get a rally back depending upon what happens anywhere back towards 85 to 100. And I think July's enough time. And I'm using calls because it could go to 40. But on a shorter term basis, I'm starting to get a little bit of divergence. See how we're making a new low here? It's not ideal because we're under 30. We're at 24. And this may be what happens in the S&Ps too that I showed you. So just imagine this. And here's the S&Ps. We've had two of them. But I think if we make a new low in the S&Ps, if we do, that we won't confirm. And that could set up maybe when we do make a new low, the RSI won't make a new low. So that's something new that I'm doing that I just started positioning for this week.
Super interesting and super contrarian. But I love how in all of this, you're kind of giving us a peek inside, how you can go about approaching an idea, which I think is really important. And that is with caution and making sure that you're checking on it, often and reducing that time frame, like you said. I think it's all fantastic advice.
Okay. Thank you, Maggie.
Dale, you're the best.
Just one more thing. I know a lot
Yeah.
of people own miners. They've actually held up better. I'm short Newmont from up here. So when gold was making new highs, the miners weren't.
Mm.
Okay. So Newmont has, and when you look at Newmont, I don't know what's been wrong with it for years, but just imagine that parabolic straight up move we've had in gold. And I looked at Newmont here, and it looks like a flag. All we did was correct this big decline.
Hmm.
And GDX, which has a more constructive pattern that did make a new high, it did not confirm up here. It diverged. And if I'm right about 2600, I think we'll see another trip down towards 32 in GDX. And that'll be, if it happens this summer, I think that'll be a back up the truck for miners, and especially silver miners.
Put that alert on your screen,
Yeah,
folks.
yeah.
Awesome.
I like
Uh,
the silver.
you like the silver.
Yeah,
Dale, it's tremendous to catch up with you. We don't usually
you too.
do things on Tuesday, but I asked you to come on because I think this is such an important time for people to be listening to folks who've had a lot of experience, who have seen big volatility in market moves before, and pay attention to some of the really, really sage advice you gave. So I appreciate it.
Yeah, be careful out there. Yeah, there's no law that you have to trade.
Right.
And sometimes you see the forest from the trees a little clearer when you don't have any subjectivity, which positions automatically give you some biases.
That,
So
that's
stay
right.
flat and observe, and eventually there'll be a setup that's so compelling you won't be able to resist it, because you'd rather be proven wrong and lose some money than take the risk of missing that opportunity.
Fantastic advice. Fantastic advice. Dale, thank you so much. We're going to stay in close contact. So if things start
Thanks,
moving, we'll have
Maggie.
Dale on again. But in the meantime, everybody take care and good luck out there. Thanks, Dale.
You're welcome. Thank you for having me.